Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. Happy November.
Happy November indeed. It doesn't quite feel like November yet. It feels more like September.
Yeah, it's really nice actually outside. We've had some beautiful days here the last couple of, over the weekend and into today. So pretty excited about it.
Yeah, a good holiday weekend for Halloween, right?
Yeah, it was about as perfect last night to hand out candy to kids as I've ever had, I think. So I'll take it. I had 55. That was my count last night was 55.
Now, does that mean you bought candy for about 80 and now you get to work through that the next few days?
That is absolutely correct. In truth, it's really my parents. When my parents come to visit me, my dad will sit there for a bit and then he'll eventually say, "Do you got any chocolate?" That's where the extra Halloween candy comes in.
There you go. That's not a bad plan. But looking at the market adjustments, any I guess spooky updates in this holiday season on the market side.
Yeah, well, up across the board, December corn last week was up 10 cents to 6.91. November soybeans up 35 cents to 14.07. Soybean oil is up almost a penny and a half to 73 cents per pound. Soybean meal was up $20 per short ton to $428. Old crop December wheat was up 44 cents to $8.82. And then July wheat up 36 cents to 9.03,
So a
breaking
lot of
that $9 mark.
Yeah, a lot of climbing markets there. What kind of highlights led us there?
Well, the big one was Russia halting its support for the Ukraine grain deal, saying that Ukraine was using the safety corridor to track its fleet. And so that was the big one. But let's go through some of the others. Ethanol production increased for the fourth straight week, up over 300 million gallons for the first time since early August. Export sales were relatively soft, except for wheat. Wheat exceeded all expectations. Open interest futures and options positions for Chicago wheat have been slow, but on a constant increase. Chicago corn futures open interest positions were up, while Chicago soybean interest positions were down 15%. Money managers increased their net positions above expectations across the board for all of our commodities there. Weekly grain export inspections were up for grain, sorghum, and wheat, but down for corn and soybeans, all within expectations. U.S. harvest is nearing completion, getting closer and closer to completion. Winter wheat plantings are 87% complete. That winter wheat condition score for this time of the year came in at 28% good to excellence. That's the lowest score on record. And then soybean planting in Brazil is 34% complete versus 38% last year and 26% on average. Planting has gotten off to what I would consider a relatively good start, Will.
All right, so some positive, some negative, a little bit of mixed action there on the planting and harvest fronts. But you already kind of teased the main topic that we got to be covering today, looking at Russia backing out of that maybe shipping agreement with the UN, kind of opening up the Black Sea region. So what are the initial impacts of this? Obviously, we've seen grain prices over the last few days tick upward again, but what does this really mean short term and then long term?
Absolutely. So this deal was already set to be renewed here in the next couple of weeks. I think this probably puts it a little bit on life support to some extent, as Russia has decided not to support the deal moving forward. And I think to some extent the market was anticipating to see rather large increases across the board on Monday of this week as we opened up markets, or Sunday night. And we did see increases, but we didn't see near the strong increases I think many people had anticipated. To some extent, we are still seeing grain move. Even though Russia has pulled out support, we are seeing product move in the short term. I expect that we'll see a little bit more tapering of that product as we move through the next couple of months. A couple of reasons for that. Is getting ships and containers in and out of the country to be able to move product. Those insurance premiums will likely continue to creep higher, prohibiting some people to go in and buy product. So, kind of an unfortunate situation across the board, but especially for Ukraine producers that need those export markets to be able to sell product and make a living. So that continues to be, I think, the big focus here is how much can Ukraine get out through some of these alternative channels.
Well, I think when looking at this and kind of examining what steps to take moving forward from a U.S. farmer perspective, I don't think this exactly means that there'll be automatic price support just sitting there the whole time, or sitting there for a period of time. But really, I think what it does is it adds greater risk, obviously, for those prices to really pop up if we start seeing more and more issues of moving grain in the Black Sea region. What's your opinion on that?
Yeah, so I think that deferred wheat contract popping over $9 this week, I think is kind of a signal in the market that, hey, wheat has kind of broken maybe some psychological barriers and has the potential to break out either way here in a big way, down or up, depending on the news or what's happening in fundamental markets. And we can talk about wheat production around the world, kind of what we're seeing elsewhere too in a second. But I also want to talk about corn, because Russia, Ukraine are big producers of feed grains, and that includes corn, and that plays big into all the feed grain categories. But when we look at our corn markets the last couple of weeks, we've been tethered to about a 680 pinpoint. We've never gotten above $7 the last couple of weeks, and we've never gotten below really 660. We've been really tethered there at that 680. So even with this news of Russia pulling out their support, that we're still seeing that tether trading this morning just right at 690. So kind of keeping that there and not seeing the big reaction that I think many people would have anticipated.
Well, looking at the lack of maybe a big market reaction automatically, early in the Russian-Ukrainian conflict, we saw a lot of big swings back and forth whenever it seemed like traders were paying attention to what was being said. And then the longer it went on, they started just paying attention to what was actually happening more so. And it seems like that now holds truer than ever whenever you're seeing, well, let's trade on action and not, just negotiations or potential promises.
Absolutely. And it's also coming at a time when the U.S. Is in harvest, and we do have some product. Now, grant, we're having transportation issues and logistics, but certainly we have product and can kind of fill some of that market as well. So there's maybe a few more options now than what we were seeing this summer, but certainly a very tight feed grain market.
So longer term, do you think this has potential implications on, global tightness of supplies moving around the world?
Yes, I do. I continue to believe that this is an ongoing, long-living problem for Ukrainian producers to be able to continue to produce during war outbreaks. Keep in mind, it's not just the war part of the equation that complicates logistics. It's also the market signals. Their price continues to fall within their country. They recognize, and to this point, I think a lot of credit should be given that they recognize their role in helping to provide food for the world, and so they continue to literally put their lives at risk to be able to do that. But how long will that last is a big question.
Well, then looking at U.S. grain export inspections, on the week, we saw some tick ups for wheat and sorghum, and then some losses, a little down week for corn and soybeans. Do you expect that to kind of reverse moving forward with not full on reverse, but maybe see that corn, at least export number, go upward as you see these struggles in the Black Sea region?
Well, there's really no other direction to go in corn than up. But yeah, certainly I would hope that we can see a few more corn exports. We're getting some nice export numbers out of the Pacific Northwest for soybeans. Of course, we don't ship much corn out of the Pacific Northwest, and most of our corn goes down the Gulf of Mexico. But certainly I hope we can, over the next couple of months, as we kind of work through the soybean picture, and we can maybe pick up some corn exports along the way to help that market as well. But you are correct. Corn exports have been sluggish. We're about 107 million bushels below the season pace right now on the corn export side.
And then on the wheat, do you expect much of the same, a continued trend upward?
Yeah, so we've seen some very strong wheat exports. Mexico, Somalia, and Taiwan were the big buyers this week. We've seen decent shipments. This last week was rather weak, only 5 million bushels on the week, when we'd been averaging closer to 15 over the last 4 or 5 weeks. The wheat picture, I do actually think could see some support. A couple of reasons for that. One, the situation in Argentina is they're facing a drought, and their wheat is struggling, or the potential for their wheat to struggle. And then also that Australian wheat crop maybe isn't as big. They're going to have wheat, but it's maybe not as big as what many people had originally believed. That's creating some global tightness in the milling quality wheat. Now, that's important because wheat has many classes, many stories. Our drought here in the United States was in the southern plains, which is primarily our winter wheat crop. Our northern plains, Minnesota, South and North Dakota, where we grow a good chunk of our white wheats and our spring wheats, had a very good year, and that's where a lot of this export demand is going to come from. And we certainly have the opportunities to ship that out of different ports than just taking it down the Gulf. So I think wheat has a very strong potential to see some exports.
I know you're smiling on the inside for that.
I do love wheat.
But no, so looking ahead, what should farmers and producers really be keeping an eye on? What reports?
Yeah, so the first of the month always brings a series of private corn and soybean yield estimates. We're getting close enough to the end of the year that we probably shouldn't see as big or expect to see as big of changes in those national corn and soybean average yields. We saw some big revisions in October, so I think we've got those worked in. Today, we've got our grain crushing and oilseed crushing reports coming out at 2 o'clock today. Ethanol report comes out tomorrow, Wednesday at 9:30. We also have the Federal Reserve announcing their short-term interest rate hikes on Wednesday afternoon during their press conference that'll be watched by all sorts of traders and market managers. Export sales report on Thursday, and then Friday, U.S. Census of Ag data for September, and then the Commodity Futures Trading Commission data comes out at 3 p.m. on Friday.
And then just a reminder for viewers who are watching the weekly commodity market program with us, these times are for Central Time, and then this is also being released. So by the time this is being viewed, those reports today will already be out. So keep in mind on that. All right, Ben, well, I appreciate the insight you provide every week. Viewers, if you'd like to learn more, watch more, you can do so at brownfieldagnews.com. Also check out our sister program, the weekly livestock market update with Megan Grebner and the University of Missouri's Scott Brown, also at brownfieldagnews.com. I'm Will Robinson on Brownfield.